in the whole area of finance, we're finding in China, not in Japan, not in Korea, definitely, but in China, women are doing really, really well as entrepreneurs, as starting new companies, as investors. You know, you hear every day about some new investment firm run by a woman. You're not hearing that definitely in the rest of those countries or here.
Well, China, to me, is fascinating. And I got to know the culture exceptionally well. And just to give you the bottom line,
Yes.
Zhu Rongji, who was the prime minister at the time, turned to me and said, "What is it you do that makes the economy work so well? Is there any way we can match it?" And I said to myself, I would love to have heard that, and basically got it into print. But it was fascinating because his view was the way we functioned was the way they ought to function. And actually he had a considerable amount of clout. He was a senior person, and basically until President Xi decided that he likes only one election for himself. But remember that coming out of Mao Zedong, who changed the culture of China, we had huge percentage increases in GDP, year after year after year. And it got to the point where the economy was gaining 20% a year, and you can't do double-digit increases of any numbers without getting what China is today. It is less than it would have been if they allowed essentially the democratic system to function, because that's what they were doing.
Where we are today, a lot of people are talking about how what is going on in China is inflationary for us, whether it's with regard to their currency or it's with regard to, the growth in their economy, but the impact of their infrastructure building and other growth-oriented investments they're making that has a huge impact on commodities. I mean, commodity prices have been among the highest, and they continue to be probably for the rest of this year again. But do you see that being a fact? And what else are you thinking when you look at the Chinese economy? Because you look at China also from a different lens.
So this is not particularly on commodity prices, but one thing I have studied a bit in the last couple of years is the way that the technology sector in China has really taken off. And that sort of cemented this idea that China is no longer a secondary power. It's very much co-equal. If you look at the number of unicorns among technology companies, the amount of venture capital dollars flowing. And indeed, you're right. When I went to China to talk to people, it was quite striking how many women were running companies, and how much of the chapter I wrote about China in my next book features women, which I'm afraid was hard to replicate when I wrote about Silicon Valley, where the main players were clearly men.
In fact, we have a study here, more women GPs in China than here.
Wow, yeah.
Is that in venture?
I'd love to see that.
We did that with IFC,
well, there has been this explosive growth in the technology sector in China, and I think that when you put that together with the fact that the nature of warfare is changing, and rather than highly complex battle systems built by Lockheed Martin or Raytheon, we're going to be looking at unmanned drones that swarm at targets and are controlled by software. So software is not only eating the world, as Mark Andreessen famously said, software is eating warfare. Yeah. And so if you put together the fact that the Chinese have become very much cutting-edge AI and software players, and they have a nationalistic leader, I think not only the economic supremacy, but the military supremacy of the United States has to be called into question.
I think our friend David Sanger writes about that too, a little bit. But it's sort of interesting that you're saying that, because if you think about it, our financial it's not just our roads and bridges that were built first and now need work, but also our financial infrastructure was ahead, but now, you know, we're behind when it comes to things like digital currency or other, or just wire that take days here, whereas in China it's instantaneous.
Yeah.
And now you put, you know, modern warfare on top of that. What does that mean?
So I think that if you look at a company like SenseTime, which I think is the biggest private artificial intelligence company outside of the US, its strategy is clearly to replicate the US sort of Google type of model. In other words, to be a commercial, global commercial provider of AI software, and then to spin out of that a military edge. Because to do AI, you need scale. You need tons of data, you need tons of scientists to interpret the data, and you also need a lot of labor to actually clean the data, which is sometimes overlooked. And so for all these reasons, you need scale to win in AI. And so the way you get scale is you develop a global customer base, and then out of that, you generate an edge in AI weaponry. So I think it's a real threat to the US. On the other hand, one thing I discovered as I researched this was the extraordinary extent to which China's technological development was driven by American or American-trained venture capitalists. Essentially, the entire playbook from Silicon Valley, including the Silicon Valley lawyers, descended upon China and copy and pasted the whole thing, so that the early Chinese internet companies, whether it was Alibaba or Ctrip or Sina, Sohu, NetEase, Baidu, all incorporated in the Cayman Islands, because then you could issue equity options in the American way, and you could list on the NASDAQ in the American way, and the contract said that disputes would be resolved under New York law. And the people doing this were the Valley law firms and the Valley venture capitalists. And so that's how Alibaba was created. It was created by the American method of technology finance. Now, when you look at what's happening today with Xi Jinping and he's clamping down on the technology sector, I think it might go back to a situation in which China isn't copying the US anymore. It's offering a much more authoritarian alternative, in which case I would bet on the US to pull ahead again.
Let me just say one thing. This is a chart which explains a great deal of our relationship. First of all, it's a combination of savings in, as you can see here, this is China and US, and the red is China.
Savings.
Well, I was about to get there. This is a combination of savings and investment. In earlier parts of this program, I demonstrate that capital investment is very closely related to the flow of savings. And this shows what why China is a problem. This is the United States down here.
And look at 2008, how much it widens during
Yeah,
the big,
that's a good point.
big crash. I think there it's even more than here, which is kind of interesting because.
Well, the government sector in 2008 in China, obviously, the method of rescuing the economy was public infrastructure investment.
Exactly. This is very powerful.
And the problem is, it isn't closing. And, you know, I've looked at earlier data, and I was, for example, trying to find, you know, where is it? Well, one particular place is China today looks like America in 1967 in the key areas of metals production, steel and aluminum. And what this shows, for example, is the fact that China, to a very large extent today, in so many different measures, looks like the United States in 1967.
Mm-hmm.
And what we're seeing is a fascinating shift, which is not apparently going away. I mean, so long as so long as this gap exists, China will be ahead of the United States in real per capita income. And what we haven't seen yet is, I mean, obviously the levels are different, but we haven't seen the close, them close in. And I wish, I cannot tell you how it strikes me when Zhu Rongji said to me, what do we do to function like you? This is a member of the Politburo, for God's sakes. And I said, listen closely to what you just heard.
And he did.
And he did.
Now the question is, with this infrastructure bill that we're talking about, but also increased savings because of COVID in the US, and the numbers are showing that companies are investing more in across the board, not just in technology and software, but other things. Whether, this relationship there is a chance that it might improve in terms of US numbers, because if there's slightly higher savings, if there's continued, sort of going back to your scenario with the economy, with corporations investing more and clamp down, like as you said in China.
This is almost double the savings rate.
Yeah, that is true. But I think one other last subject I wanted to ask you is, you've been working really hard on a new book. Could you tell us a little bit about that?
Well, yes, it's called the Power Law, and the idea is that the power law, in other words, sort of exponential takeoffs in relationships, pervade technology investing, Silicon Valley, and explain a lot of the mindset in Silicon Valley. So, of course, we're familiar with Moore's Law, where the power of semiconductors doubles every couple of years. There's also Metcalfe's Law, which says that the value of a network, like the internet, will be the square of the number of users on it. And all these nonlinear relationships, such that when technology gets going, things really take off. And then on top of that, with startups, you have a thing where the ones that work really take off. And then in venture capital investing, the partnerships that do well really take off. None of this stuff is linear. It's not a moderate world, it's an extreme world. And I think that explains, A, why venture capital works and how venture capitalists think. So a typical venture capital portfolio will, have, let's say, 10 positions, and 6 or 7 will go to 0, 1 or 2 will be nothing special, and then 1 will be in excess of the whole value of the fund. And that kind of relationship means that you are incentivized as the investor to go off and look for extreme bets. Why is it a cliche that Silicon Valley people are always looking for that contrarian, strange, weirdo? It's not for fun. It's because only somebody who's truly contrarian and a little bit out of the box is going to create a company that is different enough to have that shot at being the 1 in 10 that goes whew. And so I explain all that, and I explain what it means for US power, because US power without Google and Intel and Microsoft would be a very different thing with them. And I make the argument that although we have all sorts of other things to worry about in public policy, we mustn't trample on this risk-friendly experimentation. One venture capitalist said to me that if you take most social science, and econometrics is a good example, you're really looking at relationships and past data and expecting them to continue. So you're saying that tomorrow will kind of look like yesterday. But the big, exciting changes that really scramble power relationships and standard of living and change, equity between genders and so forth. Those things are discontinuous. So that kind of change cannot be predicted by social science. It can only be invented by venture capitalists.
That's a very interesting point.
Very significant. So when is this book coming out?
January next year.
Okay, so we have to wait, and then you'll be back here.
I will, for
Good.
sure. Okay.
Wonderful. Well, as usual, great to see you. Thank you so much for making time to come visit us today.
My pleasure.
Alan, thank you so much for a great conversation. Always learn a lot listening to you, including a lesson in history.
And thank you, Efsane.
Thank you.